Welcome back. Hope you're having a good morning. Well, Anuj joins us in the studio to tell us about how he's reading trade setup today. Morning, Anuj.
Morning, Nigel. Well, you know what? Obviously, the big talking point today is this inflation factor. Won't take too much here, but the fact that the CPI inflation is higher would be uncomfortable for the market, 7.44%. Of course, you could argue that most of it is because of veggies, but then it's like saying most of the market moves because of Reliance. I mean, that's part of the index, so you have to take that into account. So banks may continue to underperform. The dollar index is also quite sticky above 103. Brent, though, has cooled off to 85. That could be a bit of a relief factor. But, as you saw with the hike in windfall tax, that is going to be a bit of a factor for the market. The texture of the market is poor, notwithstanding the rally or the recovery that we had on Monday, because we've seen FI selling of 10,000 crores in August itself, and if you take into account from the July expiry dates, almost 14,000 crores of selling. And while at index level we have not fallen a lot, Bank Nifty has fallen. Bank Nifty has now corrected about 5% from the top, though mid caps and small caps have been quite resilient. One space, or rather two spaces that you can focus on is are IT and pharma. IT and pharma are two spaces which are still showing you some kind of outperformance, clear risk of approach. In fact, if you look at this month, Nifty IT is up 3.7%, Pharma is up 2.1%, and you compare that to Bank Nifty, which is down about 3.5% this month. So any buying, if you want to do in this market, has to be around these two sectors. The Bank Nifty is showing signs of testing its 200-day moving average. It's still about 1,000 points or more than that away from here. 42,750 is that number. I think it's possible to see a correction down to that mark. And the best example of that is SBI, which has been the lead indicator for Bank Nifty. SBI on Monday actually closed below the 200-day moving average and is approaching June lows. Quickly coming to some index levels. On Nifty, the first support I'm watching out for is 19,349. That's based on the options. And the most important support is 19,258, which is the 50-day moving average and the Monday low. If you start to break that, then another 500 points downside opens up. On the Bank Nifty, which is the weakest component of the market, the levels that I'm watching out for are basically two levels. The Monday low, 43,776, and the 100-day moving average of 43,571. Having said that, global-led corrections normally are the best buying opportunities. It's just that from the trading point of view, perhaps the market is in for some correction.
Oh, absolutely. Thanks, Anuj, for that. And you pointed out IT, right? I mean, TCS, for example, from its April lows, the stock is already up about 10% plus. I mean, it had hit a low of around 3,000 and now back above 3,400. Thanks a lot for joining in.